I hope everyone is doing well in these crazy times we're living in. We had some good news yesterday. Markets are absolutely ripping, and it's gotta be a pain in the butt to be a bear on these markets right now. This market seems to only know how to go up recently, which is very evident of a very resilient market. What I mean by that is this market, it's hard to keep it down. Every time you get any sort of bad news, I mean, the market barely flinched on the geopolitical stuff that we saw in last week. Like the stock market said, I don't buy it, and just went up. And then we, of course, see the announcement of the ceasefire yesterday, and up we go. We are tapping in, ladies and gentlemen, to the all-time high. I don't know about you guys, but if you had told me all the stuff that went down in the last few months, that we'd be at an all-time high, I'd say there's no way. Tariff uncertainties and geopolitical tensions and all sorts of craziness that we're living in, right? And yet the market finds a way to march to its all-time high yet again. NASDAQ is sitting at 22,000 this morning. It's very impressive. I'm along for the ride personally. I'm long a lot of different stocks. I'm also long the Russell, which jumped here recently, and I'm still trailing my stop loss on this trade. I'm also long the DAX, which came back to life. Looked like I was going to get stopped out on this trade and now has reversed. So indices moving higher is it's definitely okay by me. Dow Jones also sitting at resistance here, but really the NASDAQ is a killer here, right? NASDAQ and S&P 500 look really strong. Just keep pushing higher and higher. And again, this is where what I think you may have seen here is the classic climbing the wall of worry. There was all these sorts of things that people were scared about and worried about in the financial markets. And yet it ultimately was an incredible buying opportunity when we saw all that craziness in April. I've seen this story play out so many times at this point in my trading career that it almost feels too easy. However, that is the famous last words because, we know that markets aren't going to go up forever. We've lived in a stretch here that is incredible for stock markets. Like in the last few years, if you have struggled to really make money in the markets, then I would just encourage you to think about what you're doing a little more closely, because here's the thing. This is for most people, this is easy mode. This is an easy mode market. Now, I know that sounds, if you've lost money, then you're like, yeah, right, it's easy. It's hard as anything. I get it. Trading is always difficult, but let me tell you that this environment for most people is much easier than this environment. This environment is devastating for people. The reason I say that is because if you're somebody who has an investment portfolio or you trade stocks or invest in stocks, this type of volatility is very hard to keep bottled up, right? When the markets are a little smoother, specifically, we could take a look at the VIX for this. When you live in a VIX world where the VIX is low, for most people, this is better. VIX up here is really difficult because, and I'm not saying for everybody, some people really love that really crazy volatility, but the very high volatility makes mistakes very painful. So euro dollar yesterday, I ended up taking a profit on that move. It was a quick turnaround. Let me show you what ended up happening. Hold on, let me see. So euro dollar yesterday, I didn't expect it to be so quick, but it reversed course intraday. Really strong. So yeah, this was like euro dollar. I went long and I wish I had more trades that look like this, to be honest. It would be really nice. I bought and it just immediately shot into profit. Once we tapped into some resistance, I just took profits on it. And if we can get a pullback, then I'll probably play it again if I see the right trade setup. So if we kind of swing back down here, I'll look again at the euro dollar, maybe around the 1.14 level, if we can get that pullback. So gold, I mentioned as a possible pullback setup for me today. I'd love it to just kind of keep pushing a little bit lower here today. So what's happening with gold? Why is gold down today? Well, yesterday we had a little bit of ceasefire stuff, right? The news that, thank goodness, I think everybody, well, most people are probably happy that World War III has been canceled, that there was some sort of a ceasefire established. That's great news, right? And so what we saw in response to that is gold, which was playing the safe haven role, came tumbling down this morning. And we do see oil prices lower here today. I did stop out of my trade there on oil. This was a bit of a hedge and definitely did not work out. And I'm perfectly fine with it not working out because it was sort of like oil dropped hard and indices absolutely shot through the highs. Well, I mean, we're back to the all-time highs. This is insanely impressive in terms of the performance of the stock market in the face of all this uncertainty, to just say companies look strong and earnings reports look good. The consumer seems to be holding up okay. Inflation is cooling off. Rate cuts are coming. I mean, to me, the path of least resistance for stocks and indices is to continue to push higher. And with the situation now in the Middle East, definitely cooler now than it was to go into this week, we're looking at a situation in which case, in my view, indices have even more reason to stay strong. So gold is down, oil is down, dollar index is back down towards those lows, giving up a little bit of its risk off premium, giving back a little bit of that. And then we also see a lot of currencies kind of bouncing back against the dollar here. Here's the pound dollar. Here's the euro dollar pushing higher here this morning. The Australian dollar had one of the sharpest reversals I've seen in a minute here. Intraday, we turned around, everything kind of, everybody's sort of seemingly sighing a sigh of relief, if you will. You have all sorts of moves across the currency market reflective of what took place. It seems like everything is sort of de-risking today. You have a ginormous risk-on move taking place in the last 48 hours. And again, just once again, kind of showing the resiliency of this stock market, finding the ability to just continue to rally in the face of all this uncertainty.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like edge finder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
I'm also going to be watching oil prices today. So pullback in oil, further push lower. I like oil longs, which would pretty much be resetting all of this panic that we saw, completely coming back into tandem here. Let me just see if there's any headline news that I can share with the crowd. By the way, Canadian CPI this morning came in as expected at 1.7%. We did get a Fed official, Hammock, I hope I said that correctly, says I don't see any imminent case to cut interest rates. It's a bit more hawkish. Says that there is still some distance to go for sustained 2% inflation. Trump made a post this morning saying that China can now continue to purchase oil from Iran. That's exactly what the market wanted to hear, because again, that's the biggest disruption to the whole thing, is Iran not being able to sell oil to China due to closing the strait. That was the scary side of the market. And so that being taken off the table, Trump totally knows what he's doing when he says that. He's saying that issue is not happening. and oil prices can remain tapered back, which is, again, the angle of the administration big time in all this, is to keep oil prices low, because the oil prices low mean inflation can stay low. Inflation staying low means the Fed can cut interest rates. The Fed cutting interest rates means we can better administer the national debt, which is a mission that I think every single person on planet Earth should want to happen. If it doesn't, you might say, well, that won't impact me. You may be surprised to figure out that if the national debt of the United States blows up, it is likely to be an incredibly painful thing for most of humanity. Because if the Fed doesn't cut interest rates and the national debt keeps ballooning higher at the rate that it's ballooning, and we never get taken care of, and again, up for debate on whether or not Trump and team are the ones to do it, but from just a perspective of hoping the best, let's hope that they can get something figured out. If we can get interest rates to come down, we could potentially administer the national debt a little bit better, which would be a positive thing. Right now, if the economy were to tank really quickly and we have this high national debt, or we were to go into war or some sort of thing, it would be devastating, not to just the US, but to the whole world. The whole world has huge loans given to the United States, like Japan and China and Europe. All these places have loaned tons of money to the United States. So it's going to ricochet effect and hit everybody if the national debt in the United States gets defaulted on. It's not something anyone should wish for unless you want to just see the world burn. So, and of course there are people like that. So, but that's the thing. I think interest rates going lower for the US likely means interest rates going lower for other places too. And that would be a net positive thing for the global economy too. Still buying oil if it's not on the edge finder? No, definitely would need to see oil prices coming down in tandem with oil on the edge finder getting a bullish rating. So I'll watch it. It's currently back to neutral, so I'm just going to wait. Nick, oil was a good buy, but your stop loss was too tight. Yeah, it definitely was. It was just my first attempt. If I get another attempt, I may take the second attempt on oil if we get some edge finder confirmation to go with it. But based on the neutral reading that we're getting on the edge finder right now, it's probably a no trade for me unless we get confirmation. Yeah, that's so true. I mean, that's the thing. I've talked about this a lot. I'm sure that if you have heard me rant about this topic before, you know that my opinion on it is something is broken with the way, government works, because everybody is just incentivized to spend money. It's the only way you get votes, right? Votes are the way you get votes is by, imagine if I told you to vote for me and I also told you by voting for me, you're going to get a pay cut. Nobody's going to vote for me, right? That's essentially what cutting the national debt means for a lot of people. Not for everybody. Obviously, a lot of people would just love to see the interest rates come down and national debt to go down. And I think it's a necessary evil. I think it's a necessary pain. But who's going to be the one to actually do it is the question. Because it's not going to be very popular. And unlikely to get voted in is the person who is actually going to do it. So maybe it's Trump. Let's hope it's Trump. I don't know if it's Trump. That's my point. Why is gold going down despite attacks? Well, you have to think, if there is talks of ceasefires, we went from U.S. military bases getting shot at, and Iran, bombs dropping in Iran, like all these scary things, and Israel and Iran shooting stuff at each other, all these things, to now potential ceasefire, etc. We'll see. But I think, the other thing that was so fascinating yesterday, the market was on display yesterday. It had how intelligent it was. So I took an oil trade. It did not work out. I stopped out on this oil trade. But the market trend, shot oil prices lower ahead of everything else. I mean, if you want second news, look no further than the markets. They're the best source of information out there because people are placing bets milliseconds as fast as they possibly can on everything that's going on. And so yesterday you had this ordeal happening, and the market traded oil lower because Iran did not close the strait, right? So because they didn't close the strait, the market sniffed out that it was a symbolic retaliation rather than, and they also warned, I believe, officials that the strikes were coming ahead of time. The president mentioned that in one of his posts. And so the market sniffed out, oh yeah, things are getting better from here. And the market already had trended lower. That's how smart the market is. So if you ever want to be humbled, understanding how intelligent the market is that you're trading in should intimidate you a little bit. It should tell you the market figured that stuff out so quickly. No wonder trading is difficult. Smart people are behind the biggest moves. Like they figure stuff out, and it's amazing. NASDAQ up 1% here today. I think the biggest thing also, and maybe I misspoke on this. Lee points out that there was a ceasefire that has been broken already. So here's the thing, right? This can be very frustrating because people can be like, how the heck? And I don't know this. Can somebody confirm for us, like, what's the situation currently? Are things calming down, or etc.? Share with the crowd if you can. But the point is, as long as that strait remains open, the market, and this sounds insensitive, but it's true, the market doesn't really care what happens between the two fighting nations, as long as the disruption to oil prices doesn't take place. I know that sounds incredibly cold, but it's the truth. The stock market is going to say, as long as oil flow is not interrupted, those guys can have at it. It doesn't impact profits of major companies. I know that's really capitalistic society, cold-blooded, but it's the truth. And so if oil prices are shooting lower here this morning, it's because the strait has been left open, and it's unlikely, because China gets so much of their oil from Iran through that strait. It's unlikely that Iran's going to close it. And so the market's saying, oh yeah, so oil price supply is fine. Boom, down goes oil, right? So I'm saying that with hindsight now. I was wrong in my entry. I got stopped out. I took a small loss on oil, but it was a bit of a hedge in my portfolio in case things turned around or something changed. After the big drop off, I said, I'll take the risk to reward, and that didn't work out. So I took a loss on my oil trade. So I was wrong about that. Did not work out. Perfectly fine. I actually think I might take a second attempt on oil. That was weird. I can't copy and paste. Oh, there we go. Hold on. Something's going on with my TradingView. So I might take a second attempt on oil prices if we do get a bigger pullback. This was a level that I actually think I'd take a little bit more of a size on than my first trade. If we get a pullback to this 64 level, and I've been bullish on oil anyways, from a perspective of the demand side of oil. Like, I think that the economies of the world, if we start seeing more and more rate cuts and things sort of steady out with the whole tariff side of things, I actually think that oil prices on a dip, and specifically energy stocks. I may do that on my second YouTube channel. I may talk about some energy stocks that I'm watching right now. I think that could be really interesting. But if we do get some further decline in the price of oil, I may look to take some longs on USO, but also possibly trade some stocks. DAX is also firing higher here this morning. We got Russell making a push higher. I think the biggest trade that I'm in right now is still my Tesla position, which shot up 10% yesterday off of the robotaxi announcement being really exciting to market participants. The Tesla team launched in Austin. They launched their robotaxi ride sharing kind of stuff, and market really liked it. So the market was up 10% on Tesla yesterday, giving back a little bit of those gains here this morning. But I own the stock and was happy to see that kind of response. It is a very speculative position, but I do own some shares in Tesla. So we'll see how things go. Lano says, Israel and Iran both shot missiles at each other. Trump was pissed, cussed at the reporters. Just another day. I do not mean to laugh at that as in the Israel and Iran stuff, but more so the Trump dynamic of just, there's always something, right? The man, I think one thing about Trump is the dude is just, he is entertaining, whether you like or dislike him. He is constantly sort of a source of, like, it's just, the headlines just roll off the pen with Trump all the time. Bulent says CAD yen is looking really hot right now. Let's take a look at it. CAD yen, huh? Look at this. CAD yen pulling back into support. Bulent, I'd probably take this trade personally if I didn't already have CAD Swiss long. I just don't want to add too many CAD trades, but I do like that quite a bit. Looks really good. And I think CAD yen on the Edge Finder is like super high score. Yeah, +8. So looking really strong. Situation hasn't been updated since a few hours ago. Thanks, Lano. Trump's living the life. Man, I don't know, man. I don't know how that is such a hectic lifestyle to be. 1 second you're negotiating with countries all over Europe and Japan, and then next year, intermediating between Pakistan and India, and then Israel and Iran, and oh my gosh, it's a quite the day-to-day experience. Let me see here. Gold sitting at 3,300 an ounce. Let me see where we're at with this. Gold getting a +6 score on the Edge Finder. Let me take a look at. So COT data looks strong for gold. That's been the case for quite some time. Yeah, I definitely don't. So here's the thing, right? I have quite a bit. I'll just tell you guys quickly about like my current positioning. In fact, I can show you because I have a trade tracker for this. This is available, by the way, to members. If you're a member and you don't have access to this, send us a message on our website, a1trading.com. If you're already a VIP member with us. So check this out. With the trade tracker, right, we can take a look at sort of my positioning. So if I just filter really quick for stocks, actually, let's just do stocks. So I have a huge list of stocks that I bought in all of the craziness in April. And so when we look at this, you can see I've got a whole bunch of trades that have just run, some of them have done really, really well. Some of them done okay. Some of them gone nowhere. But we've had a huge bounce back in stocks. So I've been looking at the markets and I'm saying, okay, I kind of want to hedge. I don't want to be, I think it's called a negative delta, where I'm net bearish overall in my portfolio, where I benefit from the markets going down. I don't want to be in that circumstance, but I do want to sort of hedge out a little bit of all of these gains that I've had. I also think that the market back at all-time highs, we could sit there for a little bit. So I've been selling some calls against stocks that I own. I also have long positions on 2 indices. I'm long the DAX and I'm long Russell. So I'm very heavy on the risk on side right now. And I do have some silver as a bit of a hedge, but I'd like to add gold and I'd like to add oil into the mix as hedges within the portfolio. Does that make sense? So we'll see. I do want to kind of hedge out my positioning a little bit. And so if I can catch some trades, like if I can get a pullback on gold here today, I mean, it's looking pretty good at these levels. I'll watch this, and if I take that trade, I'll notify it inside of our Discord. COT data. Yeah, let's take a look at it. So we did get the latest reported COT report. It was 1 day delayed due to the federal holiday that we saw last week. Let's take a look at the current positioning here. In terms of net positioning, we still have gold up towards the top, silver also up towards the top. In terms of the overall total holdings, gold, silver, these things have been phenomenal holds for institutions. If we take a look at gold here, take a look at this. Gold has had a high institutional percentage ownership for some time, right? What we can see is that institutions have mostly ridden this really good uptrend in gold the last few years with a very high exposure on the long side. So it doesn't surprise me that they're still sitting in gold kind of long positions, silver as well. Japanese yen is also a bullish one, and US oil. These are Dow Jones, Nikkei, Euro. This is sort of your top end of the list. But let me just express that this is a little bit more longer term in nature, because when you look at the net positioning, this doesn't change very much week to week. It changes very minimally each week on an overall aggregate positioning level across institutions that report. So this is really good if you're like a longer term investor, but if you're a day trader or a swing trader, I actually think it's better to look at this secondary table that we've built here, which helps us to map out the change week to week in the institutional positioning that we just discussed. So the change week to week is more interesting. So what we can see here, I'm looking at it for the first time with you guys here now. We saw some institutional buying of oil. We saw buying the Canadian dollar, buying the New Zealand dollar, buying the Nikkei, buying the South African rand. On the sell side, they sold the dollar big time. Big dollar selling, sold the S&P, sold the yen, sold the British pound, platinum, silver, Russell, Australian dollar, Swiss franc, and NASDAQ. We also had to add into this, we had several Fed officials suggesting that rate cuts are coming. And if you've been watching the channel, you know we've talked about this recently quite a bit. On the channel recently, I've been pointing out that I think rate cuts should be happening soon. And we now see Waller, Bowman, and I don't know how to spell this, Gunlock? Is this how you spell it? Major Fed officials, major Fed members coming out and saying the Fed should be cutting interest rates in July. So we have Powell, of course, who is, as we heard recently, much more on the hawkish side. But there's a dynamic here that I want to address, which is Waller. I don't know about the other two here, but Waller, like Powell, was actually put into their place by Trump. And so I wonder if there's a possibility that there's a play for Powell's job. So this is a little bit of drama. It's possible that some of these comments from Bowman, from Waller, are partially, and this is a big accusation that this is alleged. I've seen some claims that maybe there's a run at the job here, right? But regardless of that, I do think that rate cuts are actually appropriate. We have Fed officials, several of them saying that the tariff impacts seem to be much less impactful so far than what analysts and economists had forecasted, less inflationary. Right now, there's still the potential of inflationary, but perhaps we're seeing more likely a one-time price hike rather than this persistent inflationary problem that could come from tariffs. And so I look at this and I say, okay, so we have jobs data definitely weakening. And so we have Waller coming out, who, Lee, I think you mean dovish, because Waller's definitely usually more dovish. I think that's probably what you meant. But Waller pretty dovish most of the time. But then we have sort of consensus still being like, okay, we should hold rates, but we're seeing that change. We're seeing things dramatically shift to being more of an even playing field, where we've got, Fed officials saying we should be cutting rates, and a little bit of a disagreement across some of the Fed officials. You do have Powell, who's like, we want to make sure inflation's done. But then you have other Fed members kind of being like, well, you know what? Labor statistics are slowing, etc. So let's look at this. Lee, you might be right about Bowman. I'm feeling, I can't remember. I get them mixed up, to be honest. I know Waller recently has been pretty dovish. I don't know if they're usually hawkish, but good research definitely to do right there. Let's take a look at some stats here really quick, just on the US economy, and ask ourselves, should we be cutting interest rates just based on the data, right? If we're being data dependent, should we cut interest rates? And I do have a bias here, so prepare for bias. In the sense that I think the Fed should be data dependent like they claim they want to be. So when it comes to looking at the data as it's coming in, where are we at? Well, retail sales missed expectations. Actually, let's just start from the top. GDP growth is in the negative. It surprised slightly better than expected, but still it's in the negative. So we would call this a mix, right? It was better than expected, but still low GDP. PMIs missed expectations and were just pretty rough. Manufacturing and services both missed expectations, suggesting a bearish reading for the dollar, because this would be indicative of rate cuts being more appropriate. Let's keep going. Retail sales missed expectations big time. Consumer slowed down a little bit more than people thought it would. That's definitely more in favor of rate cuts. The CPI report. What about this? Is this rate cut favored? Well, I would say yes, because we're at 2.4% inflation. And why is that a yes? Because the target's 2%. Why are we saying yes to 2.4? Well, it's because we've had 4 consecutive better than expected inflation reports. So the economists and forecasters for this stuff are thinking more inflation's coming, and they've consistently been wrong about that, and there's not been as much inflation. So we can say, okay, less inflation, that's good, and we're pretty close to the 2% target. And we'll come back to this, because yes, 2.4% is not 2%, but check this out. The producer price index number at 2.6% came in as expected. The PCE number came in as expected. Let's keep going. Wage growth was strong, right? So 3.9% compared to forecasted 3.7. That's good. That's not as indicative of rate cuts. Let's keep going though. Unemployment rate, 4.2%. Still good. Not too much to worry about here. This would be more in favor of holding rates, in my view. What about jobless claims? Jobless claims are up to 245K. I don't think that's like super worrisome, but if you start getting up above 250K consistently, I think you're talking about rate cuts being appropriate. So we're pretty close to rate cuts being favored there. JOLTS job openings came in better than expected. That's more of a rate hold. ADP numbers, big old miss. Big miss. This is definitely in favor of rate cuts. Non-farm payroll, pretty neutral, but we would definitely still say this is holding up decently well. So let's say that's in favor of a hold if you're waiting for data to break. Then we can get into house price index, cooling off a little bit. Mortgage applications cooling off a little bit. More rate cut favorable. When we look at our collective, 36% of our indicators are looking better than expected, which is a very low reading. And in my opinion, this mostly suggests that rate cuts sooner than later would be appropriate, because you're playing, I'm sorry, I said Gunlock. Goldsby is what I meant to say. Gunlock is another big notorious Bond person, I think. Anyways, my thought here with this is that most of our indicators suggest that we have economic data that is cooling on the PMIs, retail sales, some job statistics. And so my thought is, do you really want to wait Do you want to hold rates and risk holding them for too long when indicators are showing us that the economy is really cooling? How much longer do you want to hold rates at what is, in my opinion, and most, a lot of people's opinion, actually even Powell's opinion, a restrictive level, right? 4.5% interest rates in an environment where we're sitting at 2.4% inflation is restrictive by the Fed's own kind of admission. So in my view, we don't have to cut to zero, but I think we should probably be cutting interest rates modestly at this time.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.